I love when there are exciting things to talk about.
When are there
Like,
not?
some days there are more than others. But I mean, it's Crypto Friday,
Happy Friday.
regional banks, right? I mean, we discussed it a little bit, but got some more headlines yesterday.
Biotechs.
Biotechs. Yeah.
Continuing to act well.
Yeah, definitely.
Nathan saying Voz was dead on yesterday. Yeah, she was. She killed it. Nailed it. Both trades.
What up, chat? Good morning, good morning, good morning.
Ooh. So I was at a gala last night. Very fancy. I had on a tie.
Yeah, nobody wears ties anymore, JC.
It was a fancy gala. It was raising money for the zoo. We all me and the neighbors, we got dinner with the giraffes. So we have like a 5-course paired dinner with giraffes.
Steve, you good?
What do you think about that?
What do you mean you had dinner with giraffes?
We didn't have dinner. We won. Like we bid. It was like a bidding. Like it was like an auction to raise money. It was like a fancy gala. So It was funny because I just had my hand up because my boy was like, yo, this is the one we need. We'll all pitch in and we'll do the dinner with the giraffes. So I was like, all right. So this is the one we're going to win. Because waffles with the wolves was pretty cool. Like I really wanted the waffles with the wolves, but my boy, I might get the invite because I know the guy who won it, so I might get the invite.
Is that a zoo? Where is that? The zoo?
Yeah, the zoo.
The park?
No, they bring the wolves to my kitchen, Strazza.
It's a good question.
Yeah. So we go to the zoo and then we have the dinner, and then so I just had my hand up the whole time. Like they would be like, the guy was like 3,000 going 4,000, 4,200, 4,200. I just kept my hand up like that, and the guy kept going back and forth. The guy had a cowboy hat. It was sick.
Did you win it?
Yeah, I won it. Yeah, we got it.
Dinner with the giraffes. All right.
It wasn't bad. I mean, like the limit, like we set a limit. The table was like, all right, so how much is too much? Like, what are we not going to spend? And then we set a limit, and I ended up getting half of that. So I got a 50% discount to our max premium that we're going to pay. Pretty good, huh? Not bad.
That's one way to look at it.
Where were you?
It was at a gala. It was at like a country club.
Where?
Like, I don't know, like 20 minutes away.
Oh,
like by Allentown.
Oh, got it. Okay.
Yeah, it's like the bougie country club outside Allentown.
I don't know where you are anymore. Okay. So I'm just asking.
No, it was great. We took a party bus. It was sick. And then we were, oh my God, dude. So we were in a party bus and there's like, like the moms in my neighborhood, like they're attractive moms, like, right. Everyone's dressed nice. And the party bus opens up in front of this like nice gala and Cisco's playing the thong song. Okay. Right. As the thing slides open and all these girls are coming out. Is
everybody listening to this? Sell everything.
So good.
Buy VIX calls. This is the top. JC's taking party buses, listening to the thong song, buying dinners with giraffes at his local gala. It's over.
We did this a year ago too, by the way. It wasn't over then.
Phil is asking the right questions. How much did this cost you in useless coin? All right, let's start the show.
If you're not denominating life in useless, what are you doing?
Yeah.
How much useless coin?
Too much.
I don't know enough.
Yeah, all right. Let's go, everybody. Happy Friday. This is the morning show, Crypto Friday. Spencer, JC, Steve, in that order, left to right on your screens. Got a lot to talk about. We will talk about crypto at a precarious level here, or support, depending on your perspective. I want to discuss regional banks. Tough day yesterday, and we'll see what the guys want to discuss. We'll have Kenny Glick stop by. We'll have Larry Thompson stop by. We'll have Louis Sykes stop by. So that is the plan. How are we doing, chat? If you're watching us on YouTube, do me a quick favor. Drop me a like. I do appreciate those, as always, and I count them every day. Guys, what's on your mind this morning?
Today is the 3-year anniversary. Shout out to our friend Ryan Dietrich, pointing out the 3-year anniversary of the 100% chance of a recession, according to economists. We love economists around here. We love it because whatever they're thinking, we want to do the opposite, right? And throw up slide 4 there. The reason that we appreciate economists so much is that we know what they're looking at. It's not like we don't know why they're so wrong, right? Like we know for a fact why they're wrong. So this is 3 years ago today. for 100% chance of recession, Strazza.
Wow.
100% chance. If you
Big
want
blow to
buying
Biden there. Huge blow to Joe Biden.
What was their time frame?
dude, if you don't near certainty immediately, like we were already in a recession, I was being told. So, if there's 100% chance of a recession according to economists and you're not buying stocks, like the joke is on you. You're the sucker at the poker table, right? So why are economists so wrong? Why do we love them so much? Why do we love doing the opposite? Let's just keep it real. What are they looking at? They're looking at backward-looking data. They're looking at information that we all know is wrong and going to be revised and is incredibly, embarrassingly incomplete. And they make all their decisions about the future on that information, which is wild to me. But we're grateful because we want to make sure that we know what the worst market forecasters, if you will, are thinking. So we know that that's why they're always wrong. And then why is it that, we've had different kind of luck around here. And it's because we're looking at forward-looking data. The market is a forward-looking discounting mechanism. The stock market that's what we want to follow. The stock market, not these clowns. And if these clowns are telling you that there's a 100% chance of a recession, man, it's pretty close to 100% chance that it is not a recession. I'll make that bet every time. We did, obviously. I remember being on Maria Bartiromo's show in October of 2022. That must have been like right around now, actually. And she's like, JC, you think we're in a bull market? I was like, hell yeah, we got to be buying stocks. The face that she gave me, like I was fucking nuts. And they made a meme about it on Twitter and everything. It was pretty clear at the time, breath improving, right?
That was back around when they changed the definition of recession. We were so confused about recessions and how to treat them, what they even were back then.
Dude, that's right. They changed. They're like, oh yeah, no. That wasn't a recession. We changed the rule. They're moving goalposts.
Now, fast forward 3 years. We don't even have the fucking data anymore to determine if it's a recession or not.
I was going to say, we don't even know if we're in one.
Spencer doesn't like it when I bring this up, but recessions are a choice, you see, for many people, particularly those with the most exposure to the market.
Not your best take. Not your best take.
I know. Spencer hates, but it's true. You don't have to go into a recession if you don't want to. This is America.
So, look, that's a great moment in market history. But what about today, JC? There's a lot going on here. People are nervous.
People are nervous. I like it. Shall we?
Yeah, let's state some markets.
Talk about it.
Lots to talk about.
All right, ladies and gentlemen, we got a lot to talk about in crypto. We got Louis in the house, but over in TradFi, we got the Dow up 70 points this morning. That is 46,226. That 45,000 is a big one. So we're about 1,200 points above that. We'll talk about that in a minute. NASDAQ 100 futures down 50 points, 24,780. S&P 500 futures flat this morning at 6666. Yes, 6666. If there's a fourth six, is that less diabolical? If there are 4 6s? 6
as opposed to 3?
What?
As opposed to 3? I think 4 is better. Yeah.
Yeah, we're seeing 4 6s. So that, if you recall, the low in the S&P 500 in 2009 was 666. So here we are at 6666. Wow, I'm old. That was a long time ago. Bond futures down 1/3%, 118.5. Crude oil up 1/3%, 57 and change. Copper down 1%, 495. It's kind of been stuck under this 5 for a minute now. Gold up again, 43.20. All-time highs for gold. Silver down 2.4%, back to 52, back down to 52, which is hilarious to say. And the VIX still at 25. 25 VIX. So if you divide 25 by 16, that tells you the implied market volatility for the S&P 500 that the market is pricing in for a given day. Right now, it's 1.5% over, right? So what did I say? The VIX is at, what did I just say? The VIX is at 24, just under 24. So that is exactly 1.5%, right? Yeah, exactly 1.5% on an intraday basis. And then over in Funny Money Land, we got Louis here in the house. A lot of things happening in crypto. We got Bitcoin pushed just under 106, down 2,300 points on the day. Ethereum back under 4,000, 3,800 for Ethereum, down 100 points on the day, 2.6%. You got over in Solana, 181, still under 200, down another 2% on the day. As total crypto market cap, Spencer Israel, 3.53 Lowest market cap for total crypto since July.
I was going to ask how long it's been.
July is your answer.
That's precarious.
Is it?
Is it not?
It's like, listen, is crypto a leading indicator? Is it part of tech? Yes, 100%. But don't forget that crypto is super tiny. We just talked about that. It's $3.5 trillion.
Oh no, I didn't mean precarious for the financial system.
I think there's two arguments. I think you can make an argument that it is. I think Strazza would. Bitcoin, risk asset.
It's precarious for
itself.
It's going to be more
volatile, weaker hands, obviously, because it's little tiny nothing market.
There's no like systemic risk to traditional markets is what's important. And the big question now, forget crypto, right? What is important? The banking industry. How about the banking sector?
Yeah, throw it up.
Harminder says he's hearing comparisons to Silvergate. I haven't heard that. I'm sure somebody's, can make that take better than me. But I would imagine, this is something similar. Maybe
this happened right before. This happened right before COVID, if you recall.
No.
I'm
talking about, this is more like the situation with First Republic and Silicon Valley Bank, the regional banking crisis from 2 years ago, 2.5 years.
It was like a year and a half, wasn't it?
It's 23, wasn't it?
It was in the spring, or 2.5. Maybe 2.5 years.
Dude.
2.5 years. You're right.
Yeah. 2.5 years ago. This would be similar. First of all, I find it hard to believe that, some auto parts companies blow up and the banks just can't take it. Like I'm hearing crazy things about Jeffries. Like I don't understand this business enough, but it's hard for me to think that it's just that. And I think Jamie Dimon made a comment a couple days ago that's really made the rounds. Josh has been talking about it. He said on the call, and I told you guys, right? Last week, we talked about it. Said it's all about the banks next week, right? Does the weakness in high yield and private credit and other areas of financials move and spread to the banks? The banks are coming out with earnings reports. So we were thinking, okay, you're probably going to have tailwinds from good earnings reports, right? For the banks, and then headwinds from this private credit thing. Right now, the private credit issue is really winning because all the earnings reports were as good as they could be. Like so good. And then we also said there's going to be commentary about this stuff. One of the comments that's circulating like crazy right now is Jamie Dimon said, there's never just one cockroach.
Well, he's not wrong.
And he's probably right. And the market, whether he's right or not, that's what the market's pricing. Back in March or whatever of 2023, when we had the bank crisis, banks are down 30% in like 2 weeks. They're like 8% off highs right now.
Throw up the Russell 2000 with the regionals and throw that up. This is maybe the best chart I've seen in some time. Who was this, Rick? Who was this who made this chart? Yeah, it's an excellent chart. Like seriously, this is a fucking awesome chart for you guys paying attention at home. This is how to do it. Shout out to Rick, Slick Rick in the house, our local Mexican correspondent. Right, boots on the ground, Mexico City.
Yeah, it's a great chart. And look,
excellent.
it's a problem for small caps, is what this chart is saying.
So you think that the one on the bottom is correct and not the one at the top?
Oh, the one on the bottom's got to get its shit together right now.
Yeah.
Or the one up top is following.
So that's what you think. So you think the bottom is the leader. What about the stick? What about the stick that the Russell 2000 is putting in so far today? Do we care about that?
Biotechs and rare earth metals companies can't keep a bid in the Russell 2000 forever. It's getting real thin out there for the Russell.
Yeah, thin. I don't know about thin. Regional banks are not working. I don't know about thin. What do we make of the candle so far from the overnight session in Russell 2000?
Do you have the percentage of stocks above moving average data for small caps?
Yeah, we can grab that. You want to? We'll do that. We'll do an end of week one.
Yeah, I'll bet it's falling off a cliff. You can see it.
Fonz, want to run that? Fonz run that or Rick run that? Yeah, I'd love to see that. So you want to see small caps? So you want to see small caps below what?
I don't want to see them below anything. I would love for them to hang on.
You want to see the data, percentage of small caps above or below the 200-day moving average?
Yeah, 52. 20 and
52.
20 and 50 as well.
Oh. Got it. All right. Yeah, run that, guys. If you're listening out there. All right. And then what about
wait. Can you bring the chart back up for a second? So what should be the conclusion?
Well, let's walk through this, right? So in blue, you have the Russell 2000 versus the S&P 500, right? We've been talking about how small caps have been outperforming large caps, all right? Just across the board. So you're seeing the 8-month highs in small caps relative to large caps in the Russell 2000 versus 1000. Here you're seeing new 6-month highs here in the Russell 2000 small caps versus the S&P 500 large caps. So in other words, little guys over big guys. However, regional banks, which represent about, I think there's 260, if I'm not mistaken, regional bank stocks in the Russell 2000 are making new 52-week relative lows. So while the Russell 2000 small cap index is making new relative highs, the largest component of that index is making new relative lows. So essentially what Strazza is saying, and what Rick has done an excellent job of showing here, is that this is unsustainable, right? Mathematically speaking, the blue line can't go up forever with the black line going down. At some point, the blue line's going to catch down to the black line, or the black line's going to catch up to the blue line at some point. That's just math, right? It's not about fundamentals or valuations or the government. It's just basic arithmetic, right? It's really just what it comes down to.
And it's not the blue line; it's what's in the blue line, or it's not the Russell; it's what's in the Russell.
Right. So all the things in the black line are in the blue line, but the blue line also has small cap tech and it has small cap biotech, a ton of biotech, and biotech's doing great. Hence, the driver here is small cap industrials, small cap biotech, and the biotech is generally small cap. So small cap healthcare, which is biotechs. You got 200 biotech stocks in the Russell 2000, and they're making new year-to-date highs every day. And then you got small cap tech and you have small cap industrials. Those are the leaders. And then even the miners, like all the mining, metals and mining shit, all those things are small caps too, and they're working also. So you got a lot of stuff. So when Strazza's talking about deteriorating breadth in the small cap space, I am arguing because I've looked. It's really the financials.
No, it's not.
Okay.
No. Speculative growth. The tech stocks are failing left and right. You're so wrong. Financials have been bad for a month, dude. This is not new. Regional banks have been awful. Actually,
they've been underperforming. Yep.
They've been going down on an absolute basis.
Yeah.
Charles says, what caused the divergence to start back in September? Go look at the absolute trends. High yield rolled over about a month ago, and the regional banks followed. So the market's been sniffing out this situation. This didn't just happen last week or this week. Markets
aren't you impressed? But when you talk about this weakening in in the S&P 5 in the Russell 2000, that I'm telling you that I don't see at all. Aren't you impressed at just how well the Russell 2000 has done despite all that weakness in regional banks?
Sure.
Doesn't that speak to the breadth?
Yeah, I think it catches lower. Sellers are in control over the short term. So it's impressive, but it's just outweighed right now.
So you think that these financials are really the canary here, and the rest of the market's going to completely fall apart and catch down?
No one said that. Nope.
I'm asking you.
I literally nope, not at all. If you're listening to anything I'm saying this morning, I'm saying the opposite of that. Back in March of 2023, the market tanked for a minute, right? Freaked out, and then was like, oh, okay, a couple of regional banks could go away, everything's fine here. And then we all moved on. It was like bull market on, right? So I think this would be something similar. It's just we got to work through it. So for right now, if we get another big splash, a couple big red candles, I wouldn't be surprised at all. The sellers are coming out and dominating the back half of the session every single day since middle last week.
So with that being said, how do we feel about the Russell 2000? How about the Russell 2000 futures overnight session?
They really rallied this thing here this morning, but last night things were not looking good.
No, they were not.
It is so hard to short in a bull market. It is just ridiculous. I mean, they do not stay down for long. You got to be really quick. We'll see what happens, but I'll bet you when the bell dings today, they're going to hit them again.
By the way, when people say, they're saying there's no place for shorts to hide or something like that. Just for the record, I have here the statistics so far this year. I'll tell you right now, so far this year, there are 45% of the S&P 500, 43% of the S&P 500 is down this year. So when you talk about how shorts have nowhere to hide, I think they're just making excuses. I think that,
That's
as usual,
a crazy stat.
hedge
Wow.
funds, and this is before
It's
yesterday.
Wow.
It's more than I would have
Yeah.
thought.
So when people are like, they're like, I think Ben Carlson said it best. It's not about like a frothy market or like there's no place to hide for shorts. It's just that hedge funds are really bad at picking which stocks to short. Like that's the data.
Yeah.
That's what it is. There's plenty of 40% of stocks in the S&P 500, not like rando outlier NASDAQ composite nonsense. S&P 500.
Can we just look at like the ground zero of this mess for a second here? Can we bring up the chart of Zion? Which is down 13%.
Is this
Let me
at
make
the
a
heart?
comment.
Why Zion?
They had a bad call
because they
yesterday.
said so.
Some big loan losses. Yeah.
Yeah.
So that's this.
Yeah.
We're back to that. We're back to that, right? Where it's all about the the credit provisions and the loan losses, and everybody's going to be paying attention. At a certain point, JC says it all the time. There's way too many of these companies, and they keep fucking everything up. These regional banks. Like maybe we should be more like Canada. I'm sorry. I hate to be a bad capitalist, but like, how bad are these banks? They can't like. This is a bull market. The economy's fine, by the way, and these banks are out here failing. It's kind of embarrassing. So Zion should be embarrassed.
Let them go. Who needs them?
Shut down the bad ones. Like
here's how I look at it. Is it ridiculous? Like there's 260 banks in the Russell 2000. Is that necessary? I think we all agree that's ridiculous. Now on the 200 biotechs, I feel like I'm good with that because like I want companies out there trying to save lives, discovering cures for shit. Like I feel like I'm good with that, right?
Yeah.
Plenty of biotechs. Knock yourself out, guys. Like help us live to 120. I want to be here a long time. I've been waiting for a Miami Dolphins Super Bowl forever. I need more time here.
I think they should silvergate some of these bad banks, JC. They should just go close the freaking doors.
Stick them in the bathroom.
Yeah, you made bad loans in a bull market. Peace, losers.
Yeah, you guys suck at this. Yeah, right.
Here's a fun stat. As of March of this year, March 31st, there's 4,462 banks in the U.S. That is a decline of about 2,000 from 10 years ago. So the number of banks is going down, but there's just so many of them.
That's 4,600 too many.
There's a lot.
Is everybody talking about Trump?
A lot of them
Trump tweeting out there this morning in the old Trump social?
What caused the bounce this morning? Was there news on that, or was this was this a technical bounce?
I believe there were more buyers than sellers, perhaps at those levels. Maybe.
There is going to be a meeting with China. I saw that this morning.
You buying China on this dip?
Yeah.
I kind of wanted to get some more JD.
Dude, people are hating China again. I'm noticing. It's right. Right? Yeah.
Can we talk about the fact that yesterday, my friends, Thursday, October the 16th, equities in the United States down across the board, right? Down across the board. However, Europe was up yesterday. Asia was up yesterday. Latin America was up yesterday. Africa.
Not today, though.
Africa up yesterday. All of them. Africa. They don't have regional banks in Africa.
No, it's a great point. But look, so here's what you monitor now. Like, you don't want to see that spread. Last week, we were saying, hey, there's this weird stuff going on in private credit, and a lot of the,
dude, European banks were flat yesterday, dude.
Yeah, look at it. Dude, Europe's getting hit today. So just
they're down. They're down 2% on the day.
What you want to monitor, I read that the DAX was down like 2% this morning. So there's been a big intraday rally, I guess. But like last week, right, Spencer, we were saying, hey, you got this strange weakness in private equity and the private credit stuff, and high yield looks pretty shitty. I wonder if that spreads to the banks and to the broader financials. Right now, we're here this week, and that spread to the banks in a big way yesterday. It was the worst day since like the tariffs. Tobacco back and whatever.
Really, really tough timing on the earnings front. If you are Truist or Huntington or Regions Financial or Fifth Third Bank or Comerica's getting bought, but or any of these regional banks that happen to report earnings today, doesn't matter. Yeah. Sorry.
So
just doesn't matter.
No, it's true. It's true. And I'm going to talk about that in a second. But
KeyBank was yesterday. Tough. M&T was yesterday. Tough shit.
Let me finish my point. Then we'll talk about the regional banks. It spread to the U.S. banks in a big way. Now you got to look overseas. Is it going to spread to the European banks? I don't know what JC's talking about. European financials are down over 2% this morning pre-market. So it is spreading today. You got to watch that action. Does this keep spreading, right? Or do prices dig in here, carve out some local bottoms, and start moving higher again? You don't want to see the weakness continue to spread.
We are off the lows, though, Steve. So let's just say that.
And was there any news? Like, is this like some of the regional bank reports that came out today? They're going to be watching these things.
I didn't see anything on the European bank front to answer your question.
No, I'm talking about regionals. Like, I know there were like Comerica was this morning, Fifth Third, couple.
Yeah, there's a ton of,
and they're all.
It's
good,
all
right?
related to what it's all about yesterday, man. It's all about what Zion said. Zion and the other one, right? Western Alliance, right, which was down what 10% yesterday. It's the same idea, same thing. Bad loans.
Dude,
I wonder if Kenny.
I wonder if disagree. I love you, Wavy. I could not disagree more. Can't force anybody to buy bad assets. Come on.
I want to see if Kenny's getting down and dirty in
Here's
this.
the thing. If you want to feel bad for the regional banks that suck right now, what about the other 4,000 that did things right and don't suck? So they weren't forced into anything.
Yeah.
There's
always going to be
the banking business very personally.
And
there's always going to be bad. No.
I'm
Steve is right, though.
Good operators. A capital market system in America is one of the most important things literally to the world. Global wealth. The banks here in America are so important. You go ahead and make that face. So I'm supporting JP Morgan today because they're the good guys.
Get rid of them all.
They're the good guys.
No, Steve is right. A bank should be able to fail without the world coming to an end, right? So
it's ridiculous.
We have to be a little uncomfortable.
Get him out
Let's
of
bring
here.
on Kenny. Let's bring on Kenny.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Mr. Kenny Glick in the house.
He said something that made me think of something funny. And they don't have regional banks in Africa.
They don't.
Something.
They don't have that.
Else.
They dig holes in the ground. They look for rocks.
Oh, man. It's Christmas time. Yeah, what's going on, everybody?
Everything, baby. I heard that shorting is short-lived and you're going to die.
Except for last night. I mean, we went from the schmooze to a little innocent VWAP break on the NQ futures to a 360-point sell-off. And the VIX products, my friend, if you don't think everything's tied to the VWAP, look at this right here. This is UVXY, right? This is your fear gauge. Hang on a second. Let me get this bad boy up.
Do they still call it that?
The fear gauge? Yeah. If you're not looking at UVXY almost as religiously as the Trader's Almanac, you're not day trading correctly. This will tell you where the market's going. It really is that simple. UVXY really never goes up. And the only time it does go up is when the market is heightened about something or other. And yesterday we had, UVXY doing unusual things, rallying into the close. That's very dangerous. You don't see it too often. And again, if you guys know about UVXY, this is a split adjusted chart of just the last couple of years. It basically always goes down. And the split adjusted price for it is 2.8 billion because all they do is split it and it goes back down. They split it. You get the idea. So when you actually have a couple of up days, so over the last 5 days, let's make shorting great again. And you got UVXY showing some strength. Well, I'll show it to you on the monthly. You see it. You finally came out of the bottom and you got 3 out of 4 up days in UVXY. You better be short in something. Gots to be short in something. So we've had the best couple of days on my website in the history of the site. So one guy had a $50,000 day, $250,000 week, just shorting the same stocks that we were pounding on the way up. So the USARs, the UUUs, the rigatonis, and some guys got borrows on that RGTX. Look at the fall. This is the leveraged version of RGTI,
which I'm still stunned is actually a thing that exists.
But yeah,
fantastic.
It's the same trade. So instead of shorting RGTI, you're shorting the VWAP break, and this was a 240-point fall. And again, if you guys that aren't brave enough to trade that, you got RGT. What was it? RGT. I can't remember.
RGTI is the
RGTZ. Right. RGTZ is the long short version. So you could buy this to play the tankage in RGTI. So there's something for everybody in this market.
Yeah, this is a great example of, they're going to continue to build new ways for humans to make bad choices, right? And so with all of these new ways that they invent for humans to make poor choices and lose money, just flip that on its head. That provides more opportunity for the rest of us who recognize the poor choices that the humans are making. So I'm all for these types of mechanisms. I know it frustrates some investors sometimes. They're like, this is ridiculous. Yes, it is absolutely ridiculous. And that's what makes it great.
Right. And listen, if they make things easier to short, that's actually a good thing. Again, so they don't have to lay out as much cash to
Dude,
short.
they got the 3X, the 5Xs already filed, right? You saw that? Like, they're building stuff for people to lose money. It is great.
Right. And if you're afraid of 0-date options, you're not using them correctly. It's the greatest invention there has ever been, because now, if you're a QQQ trader, you only had the mini leverage one, TQQ and SQQ. Now you've got intraday, basically, options, 0-date options, where now you're trading these $600 stock for 50 cents and a buck. And there is nothing better, because now, again, you're still going to get the same 5 or 6 move on the Qs, and now you're trading an option that's only a buck. Your minimum trade should be a double or a triple. So
that theta decay moves fast, though.
Yeah, for sure. Right. It's usually an all or nothing trade, but
that theta decay is because, as someone who's been trading options for 20 years, like, I could tell you about theta decay, of course, but the 0-dated options, it's a relatively new vehicle over the last few years. That theta decay, because it ends at the end of the day. So, like, you're talking like seconds, theta decay by the seconds, not by the day, like the options that we're accustomed to trading over the years. So it's really fascinating.
Yeah, and it's not again, like I said, it's not as dangerous as you think. It's basically you're trading this, the option in lieu of the stock, and especially with a half an hour left in the day. Yeah, you're straight up gambling, but you get those rips at the end of the day, and they also, which is crazy, some people don't know, they stay open for 15 extra minutes. So there are times where, I remember when Facebook reported, we had some options that you would think just expired worthless, but then Facebook came out with a great report, and the Qs ripped 3 points. So your option basically went from 0-0 to $3, and you got saved. So there's so much going on. And again, some platforms won't even let you trade them because they don't want you to be in an exercised option, late in the day if you don't have the money to back it. So there are platforms that won't even let you trade it. So you should check that out.
Smash saying these 5X products might prove to be a better way to trade versus 0 or 1 day till expiration options. Yeah, you know what it really is. It comes, different strokes for different folks, right? Some people don't have an options account. Some people don't trade options. So the 5X is what it is. Some can't. Like, some have in their mandates in their, RIA or fund or whatever that they can't trade options. So they got to only be in the common. Well, that's where the 5X comes in.
Yeah.
Right. I mean, there's use cases across the board for both.
Sure. Yeah.
And then there's us. We don't give a shit. We just want to profit from people making poor choices. That's it.
Right. And speaking of poor choices, right, I just want to make everybody perfectly clear. I don't own stock. So when I'm all rah, the metals and the nuclear, they're still only just trades. Sure, I was swinging a couple of these things, but man, if you were in our room this week, you would have seen the true essence of trading. That the UAL might have been the #1 trade of the year. And if you're not using VWAP, I don't know if you guys see my chart. The UAL, if you could understand what happened in this chart, you are now I don't want to say you're a professional trader because they charge you more for data, a pseudo-professional trader. This was the greatest action, and it was it might look crazy, but it was very navigatable because the way we trade.
It's crazy.
It's crazy. You're telling me that you like it short, and then 20 minutes later, you're long. I mean, some sort of flim-flam here. It's crazy. But it really was that story. So we came
walking through the charts there?
Yeah, we walked.
Hey.
The idea was to short UAL, and we were getting paid on the short, But as I warned you, as you guys were saying, every short, you're a faux show, bro. VWAP break away from getting your head caved in. Shorting is short-lived and you're going to die. So as I'm having this conversation, I'm like, all right, we're going to have to start covering this UAL just in case it starts to come back. And then the fake out, shake out happened. And then as I was saying, hey, maybe we cover and go long. it just ripped through the 101 and ripped 5 points. And even if you got in late, which I got in late, I got in at 103, still managed to make 2 points, and then got stopped out on the way down, and then it's set up for a short. So I was like, are we going to actually trade this on the short side again? And we did. And look at this monster move. You broke the VWAP, you held it, you broke it, shorted it, and got paid again. And then what was the miracle was that it became a long coming out of the Andy Dufresne and the Kardashian bottom. And we were on the right side of this trade 4 different times, 2 on each side. So that's trading. So, to the person that might just walked in the room and just say, were you just talking about shorting this and loving it? Now you're long? Wait a minute. Now you're short again? Yes, that's how it happens.
And this is only possible because of the volatility that was happening in that stock on the given day. What, they came out with earnings, right?
Precisely. That's
so there's a lot of volatility, a lot of moving parts, and you're going to get a lot of action. So what Kenny's good at, best in the business, is at trading the stocks that are moving the most. First of all, finding the ones that are moving the most and then figuring out ways to participate. This is just a great example, but these things happen, maybe not this clean every day, but they're there every day.
Yeah, and then you got Taiwan Semiconductor, which was just, you couldn't have made money. You could not have made money using our setup. So basically, we're looking at short stocks that are gapped up. This one just immediately started plummeting right out of the gate. And even if you were late, again, it's better to be late and right than early and wrong on some of these. So you're waiting for that VWAP break, and then it just breaks the pre-market pivot. I got short around 307. You blinked, the thing was down 5 points. And then inevitably, you got your little finger of God right there, another chance at it. And it was just a wonderful day of trading, other than the fact that we were crushing the coal, the metal stocks and the nuclears and the rigatonis. The earnings reversals still have not had a failed trade yet. So the streak continues. And if you guys are in the room today, we're looking at CSX. Here's a little choppy, but keep it on the radar. You also got AXP, which already little faux show, bro. I guess not a lot of volume in the pre-market. So kind of just taking the foot off the pedal, waiting for, to see what happens next.
All right. Hitthebid.com. Trade live with Kenny every morning from like 7:30 till the end of time.
Or you just stay up for 4 days straight on Adderall. What's up? See you later.
All right. See you, Kenny. Guys, let's bring on Louis. It's Crypto Friday. We got to talk about the Bitcoin here and the altcoins and what's happening. What happened last Friday? What happened this week? It's been nuts. So I got Louis here. Let's bring him out.
Please.
Bring him out.
Avocado and toast, leather seats, jet plane, always ready to go.
Oh,
morning, guys. How's it going?
What's up, Louis?
I'm just over here listening to some Neil Young. I'm having a good time over here.
Little Neil
in the
Young.
morning.
Ooh, nice. How you feeling right now, Louis?
I got to tell you, you got this Mick Jagger look going. I'm kind of into it. I like it, Lou. Right?
Thank you. I mean, not everyone can rock a collared shirt here at 2 in the morning, but I'm trying over here. I'm trying.
Good. Looks great. So we're here to take advantage of humans making poor choices, Louis. And as somebody who analyzes humans as well as you do, both anecdotally and through the data, I really want you to dive in on some of the liquidations that took place over the last week. Someone was saying, "Oh, JC doesn't make poor choices." You bet your ass JC makes poor choices. Ask my wife. She'll tell you just how many mistakes I make on a regular basis, actually. My job here in the market is to expose those making the worst choices and those with the most money. And so Louis does a better job than anybody I know at quantifying that behavior with the forced liquidations that are taking place on altcoins. Louis, fill us in. What the hell's going on out there?
Well, look, when other people are forced sellers, it's generally a good time to be buying because, we've seen the largest amount of liquidations in crypto's history just last weekend within a single day. So $20 billion of liquidations in a single day. So what does that actually mean? So on the stock market, we have margin calls, right? So if you have a leverage position and your margin falls below how much collateral you have in your account, you got two options. You can post more collateral, or you can close the position. But in crypto, the exchanges don't give you that courtesy of choosing. They just automatically close your positions. That's why we see those liquidation cascades, because you have a whole bunch of people trading a whole bunch of leverage. price moves lower, they liquidate people's leverage positions.
With no
So
limit
they
orders.
sell it. Yep, not limit orders. They just sell it on the open market. They don't give you the courtesy at all. That pushes prices even lower, which causes even more liquidations, pushing price lower, and it's just this snowball effect that really just gets going. And so a lot of people have been just saying to me, Louis, this crypto crash wasn't even that bad because Bitcoin isn't even it's still trading relatively close to its all-time highs, even though there's some damage in Ethereum and Solana and Bitcoin. They're fine. But the real damage was down underneath the surface and a lot of these altcoins. Now, just for perspective, just so you guys understand, about the average altcoin literally collapsed about 80% in the space of a few hours on many of these exchanges. I want you to pull up just the chart of Cosmos that I have there. It's just one of many altcoins that I follow.
And this is one that's been
That's
around forever. A few cycles ago, I've traded this one for many years.
This is what I'm talking about, folks. These are the charts that are all over crypto right now. This one literally printed at 0. It literally collapsed 99.99% in the space of a few hours. This one's an extreme example.
And this
but
is
there's
real
just-
market cap. This is a real market cap company. Not company, but
Yeah.
token.
Exactly. And so, there's a lot of cryptocurrencies that look like this right now. And so, where to from here? We've got Bitcoin. I want you to pull up the Bitcoin chart right now. So, Bitcoin 105 is the key level there. So we're currently flirting with breaking down below there. So things aren't things are looking a little bit messy. But I just want to reiterate that after such an intense crash, we get these crashes every so often in crypto. But what tends to happen in the weeks following these is we get a lot of head fakes because a lot of liquidity are just being completely drawn from the market. A significant portion of the market that's actually trading these coins literally got taken out. So just think about it. An entire demographic of crypto traders literally got liquidated, taken out in droves in the greatest levels since FTX of November of 2000.
So we were talking about that yesterday. It was a little bit of a point of contention on the phone yesterday when a few of us were talking about crypto, and Louis was talking about how, this is the biggest forced liquidation event ever, compared to FTX. And it's like, well, was it really, and Louis pounding the table that this is an FTX moment. And if this is an FTX moment, this is an asset you want to be buying, right? Here's the difference. The FTX moment happened after a big decline. This is happening at a higher level. It's a much different situation.
Yeah, it is. It is. It really is. And so what tends to happen after you get these big crypto liquidation events is you just get a whole bunch of whipsawing and just messy fake outs for weeks after the fact. And so it wouldn't surprise me to have Bitcoin just meandering below this 105 level. Everyone thinks it's breaking down. And then we get back above 105. And then maybe we get back below 105. And it's just people are just trying to guess the bottom. They're trying to buy dips or they're trying to buy a breakout on the next rip higher. But then they just keep getting faked out because, again, a whole bunch of liquidity has just been drawn from the market. Volumes have really dried up in a lot of these altcoins. A significant demographic of the people actually trading these coins literally got taken out in droves. So they're even more liquid now than they were just a few weeks ago. And so again, I think just giving it some time, but I think ultimately, I think there's a lot of opportunity out there because again, when
Put on
others
slide 3, this is the best chart. This is a hell of a job, Louis. This is a great chart. This is people want to know what the hell is going on. This is what the hell is going on.
I mean, look, people have been waiting for this altcoin season, this entire bull market. They've been buying these altcoins saying, hey, look, in a bull market, these more speculative, these smaller market cap coins should be outperforming. Everybody has been waiting for this altcoin season, including me. I've made a few calls saying, hey, look, this is it. I think we're moving ahead into the altcoin season. I've been wrong on those times that I've made those calls. But I think there is no better place right now for the altcoin season to start that everybody has been waiting for than to literally take out everybody who has been positioned for that to happen. And so I think this is totally the capitulation moment that could see this black line moving higher.
Like that. So this is it. So this is it. And then how do you know that this is it? If we're above if we're above 105, otherwise then that calls into question, whether that's right or not.
Yeah, I mean, look, if we're below 105 in Bitcoin, that's likely happening in a tape where you're seeing that risk off really hitting traditional markets. You're likely seeing the S&P 500 beginning to give up some of its gains. You're likely seeing volatility blow out. So in the short term, probably just stepping away makes sense. But I think that just fits into the broader picture where, again, after these liquidation cascades, just give it some time. The market likes to whipsaw and fake around, but ultimately, I think the worst is behind us.
Man, that's such a great chart. All right, so you brought in, what are these block charts?
I know it's a bit of hearsay around here having a black chart. But look, it's 2 a.m, so it's easy on my eyes, so bear with me.
Yeah.
What we're looking at here is we're looking at just what's happening in the derivatives market. So there's a whole bunch of different lines and candlesticks. So you're probably looking at this going, Louis, what does this even show? So what we're looking at is we're looking at Solana. The top pane is price. The pane below that is open interest. So that's the value of all open positions in the perpetual futures market. Below that, we've got funding rates, which is a really good gauge to understand whether shorts or longs are the most aggressive party. And then below that, we've got liquidations. And so again, just reiterating that there's a significant amount of positioning that got wiped out. You go across all of these individual altcoin charts, about 2/3 of futures positioning literally collapsed within the space of a single day. Even looking at Bitcoin, I got a chart of Bitcoin there with that black chart that I want you to pull up. So again, futures positioning is futures positioning is currently at levels where it was at in April of this year, with price significantly higher off the lows. And so again, a significant portion of positioning close out in the futures market. So again, I just want to reiterate that when others are forced sellers, it's generally a good time to be buying.
Give me one name. Give me one name you like right now. Altcoin down the cap scale.
Altcoin down the cap scale. I'm not sure how crazy you want me to go off this.
I want you to go as crazy as you want to get.
I think it's hilarious. You know what? Something that just makes me laugh about this entire situation. Crypto's literally crashing. The one crypto that held up almost the best was Useless Coin.
I was thinking,
coin
I
that
knew you
literally
were gonna say that.
a coin that advertises how worthless and useless it is, literally
relative
held up the
strength.
best in a market correction like this. I mean,
Yeah.
I mean, you just got to find the humor in that.
And then Useless Coin right now, at last check, 144th largest token, 144 on the ranking. Currently, $300 million company, Freudian slip, $300 million token, which would make it a small cap, which would put it in the Russell 2000. Just an FYI.
I think it gets to $1 billion, easy.
$1 billion Useless Coin. All right, Louis calling for a triple in the Useless. Doesn't sound so useless to me. Sounds like a good way to make some money. I like it.
Oh yeah.
Louis Sykes, aka the Mick Jagger of technical analysis. Louis Sykes in from lovely New Zealand. I hear it's lovely this time of year there.
It is. Go for a hike tomorrow in the absolute middle of nowhere. It's called Lake Hodakor. You go there. It's in the middle of nowhere. There's not a town for hours, and you just hear absolutely nothing but birds. So I'm looking forward to that tomorrow.
Let me ask you something, Lou. Do you Kiwis put mint on your lamb chops or no?
Absolutely, yeah.
Yeah,
absolutely.
you're one of those.
I mean mint sauce. I mean a little bit of rosemary as well. So rosemary.
You go mint? I don't like that. All right, get out of here.
No mint is great. I mean, it's you're totally wrong. I mean, JC,
I've been meaning to ask you. I don't like your answer. All right, get him out of here.
If you're going to take lamb advice, you listen to the New Zealander, not the Cuban.
Hi, Louis.
You know, they do that,
if you want,
they do that like in the in the East Mediterranean. You know, they do that also.
Yeah. Listen, if you want to actually know what cryptos Louis is buying, he's had a couple banger trades the past few weeks. I just dropped a link in the chat to get all of his picks and research at AC Crypto. So, Steve, you're still here. I'm surprised. I thought you'd be getting ready for your next shindig, which we gotta tell people about. Okay.
I was gonna just make sure everybody knows to be there because we're gonna talk all about.
So we've got Larry Thompson here, so I'll bring Larry on. But then after we're done at 9:30, like I said yesterday, we're going to be experimenting with more post morning show content. Yesterday it was JC, myself, and Vaz. Today, Strazza is doing I don't want to call it like an emergency stream. Emergency is a strong word, right? But it is a necessary special stream. He's going to go live, basically tell you how you had the best month of your life. The past few weeks.
The truth.
And
Here's the truth. We have a nice slide deck. We're going to go through the process, talk about how this has just been the best 6 weeks ever for the system, show you how the trades work. But if the market's rolling over here and we have a ton of volatility that we either need to be protecting our portfolios about or putting trades on, we're going to take that slide deck and just throw it the fuck out and throw up the live charts and just worry about
Dude,
those
this
slide
is real
decks.
life. I love that you're doing this because yesterday we were having this conversation. I
Well,
said,
I don't
no, we're
know.
going live at 9:30. Shit's hitting the fan. We got to be trading. So this is Steve Strazza. This is great. I love this. Steve Strazza we have a plan, right? The plan is to show you how great Steve is and how great the system has been, because some people are like, they don't believe it. They're like, how is it possible that you're getting all these returns? Like, they think it's fake. Like Steve's golf buddies, they think like it's a fugazi. Everything's there in real time. So he's going to walk you through that. But if shit is hitting the fan, hard pivot, Omaha, audibly to live trading if that's what needs to happen. I love it.
So we'll see.
I love that.
You know,
You guys
we'll
see,
keep it
this is
full.
the solution. It's a beautiful thing.
That's awesome. And everybody have a great weekend.
Yep.
All right, Pete,
so
Strazza,
if you're
go
watching
do your
us
thing.
on
Bring on
YouTube,
Larry.
if you're watching us on YouTube, yeah, I will. When this stream ends in like 10 minutes, it'll automatically redirect you to the next stream.
Cool, it
with
does that.
Strazza. But let's bring on Larry Thompson. It's been a minute since we've had him on. I think he was moving and he's done now, which is exciting. Larry, do I have your bumper? Yeah, I do. Okay.
Dude, Larry's
Nice.
bumper goes hard.
Yo, yo.
Yes, it
I
does.
like it.
What's up?
How we doing? I got to undo another button. I saw Lou rocking the chest.
Dude, I was with a guy yesterday at this charity event. He had his buttons down to like his belly button. He had so much chest hair
Okay.
sticking out. I was feeling uncomfortable.
I have no body. Barely can grow facial hair. So
Yeah, no doubt. All right.
Blessings.
Well, Larry, I heard the market's crashing. Is there any fact to that? Is there any truth?
the altcoin market's crashing. I
Saw
think
that. That's real. That's real.
Yeah, altcoin market doesn't look good. No, I don't think crashing's probably hyperbole at the moment. It's been loud, but it's been like right now it's just kind of messy, right? I think Strazza put it well earlier on the show, and I think it's probably part of kind of the open bars, like kind of in the middle of the mess. Like there's not capitulatory evidence yet. There's not like sustainable strength evidence yet. Like we haven't seen 2 back-to-back green days. We've stuck in. We haven't seen that capitulation from the S&P 500 type perspective. It's just,
Dude, the Russell 2000 is on pace for the best weekly close ever.
great.
Right? Like, when we talk about, to your point, kind of like putting things in perspective.
Yeah, I would also say in perspective, I mean, when the Russell 2000 was doing nothing for a long period of time, we said, who cares? They're small cap stocks. And I think when you kind of look at the bifurcation within it, I think it's biotech, right? It's mainly biotech and some metals and mining stocks. And those are the exceptions.
And tech.
It's partially tech. The PSCT,
Tech is going to close. Small cap tech is going to close at the highest levels ever today.
Okay, what's the largest component in small cap tech? A $20 billion stock.
Yeah,
That's
fine.
not small
But
cap
it's
tech.
It's not
It's
just
like a
metals and
quantum
mining and
stock.
biotech.
I didn't say it was just. I said it's mainly. So
Yeah, but tech is the largest weighting in the Russell 2000, and basically tied for the largest weighting with financials in the Russell 2000. It's making new all-time highs. I think the weakness is really tied to regionals, and I wanted to hear your thoughts, Larry, because you're
the weakness being tied
throw
to
up slide
regionals.
11. Throw up slide 11. This is the chart. I want to hear your thoughts on this one.
All right.
Larry's a smart guy. Looks at things through a clear head.
Yeah. I love this chart. I commented
Great chart, man.
Great chart. So I think, right, the one thing I told Rick about this chart, I said, add biotechs to this. So have it be 3, have it be the regional, because you'll see the bifurcation between biotechs and the regional banks. I mean, the majority of stocks in the S&P 500, I know we're talking about the Russell 2000 here, but the majority are below their 50-day. The majority are below their 20-day. That's starting to trickle into the 100-day. You're seeing not just regional banks. Recently, right, the crash has occurred in the regional banks, but you've seen cracks in other areas of the market. Consumer discretionary kind of could show that chart. It's not getting back above where it's supposed to get back above.
Particularly relative to staples too, right?
Yeah, look at equal weight S&P 500. Could you pull up that chart, Spencer? 24. I think this chart kind of highlights the mess from a kind of intramarket or just S&P 500 perspective that we're seeing right now. The thing I want to highlight on this chart is I don't think patterns are like the focus here, right? The focus is the character of the price action. So what you see in the S&P 500 equal weights, you saw a failed breakout, right? This takes 500 individual stocks, gives them each a single vote. You saw a failed breakout. Then you saw a kind of a failed breakdown. We kind of stuck it where we needed to, short term. And now you're kind of meddling sideways. But the thing you see here that you see when you look at consumer discretionary, when you look at consumer services, when you look at industrials, when you look at financials, is look at RSI. RSI is actually curling. Yeah, stay here for a second, Spencer. RSI is curling below this RSI 50, which it's not a magic characteristic. It's just we've had momentum. When we've gotten punched in the past during this rally, we've had momentum to swing back. And right now we've just kind of stood up and we haven't really swung the bat or swung a punch at the bears. And so looking at a chart like this, which I think there's plenty of charts that look like this when you kind of go through the deck, it's if you want to short, hey, you have clean risk reward to short here. The other side of this is what Strazza was saying.
You can make the same argument for the Russell 2000, by the way. If you want to be short, you want to be short Russells if we're below last year's highs. If you want to be short consumer, you want to be short if we're below those prior highs from last year. Yeah. Otherwise, any bearish thesis is invalidated, I think.
Exactly. And the trickiness of this, which is why it's hard in bull markets from an index level, is look where support is. Support's 4 or 5% lower. So like,
all right, where do you think support is?
I would say the 200-day, this prior all-time high AVWAP on this chart. So that's like 4 to 5% lower. And you see this on a lot of these charts. If you run that prior cycle.
Yeah, no, that is a good point. Yeah, that's right.
You got 3 or 4 or 5% on the downside. That's like, okay, so you don't have that much equal weight, same thing, right? You don't have that much downside to play against. So just like let the dust settle a little bit. Like either wait for that capitulation and then a good follow-through day, back-to-back days or something. Wait for VIX to really blow out and then kind of revert. But right now we're just kind of in the middle of it. I don't have an edge when we're just in the middle of this like mess side. Sure, you can trade IWM. To me, it still is the majority of that being driven by XBI, by biotechs within it. So that to me is the exception of what's occurring, not the rule.
Yeah, I don't know about that. It's just biotechs. I mean, you said metals and mining.
Not just biotechs, mainly biotech. There's 2,000 stocks. So yes, you're going to be able to find some that aren't doing that. But if you look at biotechs as a whole, right, or Russell 2000.
Here's what I'll say. The underperformance of the regional bank stands out, especially to someone like me, who will be the first to tell you that banks are the most important sectors in America. I still stand by that. So for me, that's a big deal. What I haven't seen is expansion to the downside, because you talk about biotechs doing well, small cap industrials are doing well too. Small cap tech is doing well too. Discretionary, right? Like you talk about large cap discretionary, small cap discretionary still shaky as well. So if you start to see more participation to the downside where it's not just the regional banks, and usually if there's the regional banks, that's a good leading indicator that there's probably more. We'll see. But banks are important. I'll be the first to tell you that. We got a little. Let's do a quick little recess, and we got to hop. Strazza's got a live show. Spencer, let's hit it quick.
Yeah, and he's crushing it. For those that don't believe it's real, it's real. Like Strazza's on fire.
Yeah, Strazza says he's buying puts live. All right, quick recess, slide 2. Just got Morgan Housel's new book, The Art of Spending Money. We're big fans of Morgan Housel here on Stock Market TV. Probably the best author of our entire generation. Great thinker, Morgan Housel, absolutely the man. Wrote The Psychology of Money. Highly recommend that book. This is The Art of Spending Money. What I love about Morgan is that he's always talking about how money exposes the real person. If you're an asshole, if you have more money, you're going to be an even bigger asshole probably. And if you try to do good things and try to make the world a better place, if you have more money, that's just going to expose that trait even more. Which is really interesting. And you want to use money to make your life better. You don't want to be a slave to the money, right? Is some of the points that he's trying to make. Why do you have a big house? to show off that you have a big house? No. The reason having a big house is great is because you can have people over. You can have your friends over, your family over, and that's what makes you happy. Not, hey, I got a big house, right? It's what does a big house do for you, right? So just stuff like that. Really, really cool. Shout out Morgan Housel.
Love it. His book, Same as Ever, is great too. My recess will be Strazza, Breakout Multiplier. Just listen to that guy's on fire right now. If you believe in momentum, you believe in hot hand. Strazza has the hot hands. I'd pay attention to what he's saying.
The hot hand fallacy. I'm just kidding.
He's been nailing.
People don't believe it. His own friends don't believe the returns.
He's been crushing it.
Crushing it.
He's been crushing. Also,
right.
35% of Russell 2000 stocks are above their 20-day. 40% are above their 50-day. So the majority of stocks in the Russell 2000 are in intermediate term downtrends.
Sounds like a lot more can get in uptrends.
It does, but it sounds like the majority aren't. Love you guys.
All right. Here's the play. We're going to end this now. If you're watching us on YouTube, it'll automatically redirect you to Strazza stream, which is going to start momentarily. Don't forget, Larry's going live, right? 5 o'clock today. Larry Thompson's 2 cents.
Yeah, all gas, no breaks. Yeah,
Grab
20 charts.
Grab a drink, pull up a chair. Let Larry guide you. We can review. All right. Thanks a lot, everyone. Strazza's going live like right now. Go make some money. Enjoy your weekend. All right.
Adios.
See you guys.
Bye.
I can't take no